Hey everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and we are in our older studio because our new office is being totally renovated,
AKA our kitchen. Our kitchen bar.
That's right.
Yes.
Okay, so what are we talking about today from our kitchen bar?
Today we're talking about the next 4 things in line, so numbers 9 through 15. No. We're talking about math. We're talking about simple math today. 9 through 12. Thank you very much. On how to get your offer accepted from a buyer or from a seller over all the other offers they're getting in.
That's right. All right, here we go.
And he'll do the math.
Okay. All right, so we've run through several other options. We're not going to recap them all here because honestly we don't have them in front of us.
Go back and watch it.
Go back and watch those videos. Yes, we've done 2 videos, 1 through 4 and 5 through 8. So now we're on 9 through 12. So number 9, what is number 9?
Number 9 is all about escalation and appraisal gaps.
That's right, that's right. So strategically use your escalation, strategically use your appraisal gap. And one of the keys is make it significant, and that could depend. Like the significance of it depends on the price point. So
$1,000 isn't really going to be.
No. Now maybe on a $100,000 house, the seller might be motivated by 1,000.
We are talking about our area.
Yeah, yeah. So it's got to be a significant number because you're also competing against other terms.
Yeah.
And sometimes you can consider putting in an odd number. So let's say your appraisal gap is, we're going to use the $1,000 example. Well, instead of doing $1,000, do $1,180 or something.
Now all agents have different personalities. I think that's dumb. I'm like, why would you think that this is going to matter to anyone? But some people do it, and you actually like it. You're like, you get a little chuckle out of it.
I do. It makes it stand out. Like if a seller's looking at 4 offers and they're all really, really close.
It makes me stand out. Like, what are you even thinking?
I'm thinking I wanted to get $128 above the last offer. So anyway, you could consider that if your personality thinks that could be a good thing.
Because maybe the seller's personality is the same.
Yeah, could be. You're thinking
maybe one of them is, and the other one's like, why would they even do that?
Yeah, that's right. So anyway, but the key to that is making those numbers significant, something that will inspire the seller to go with your offer.
And it's very important. Like appraisal gap money is different than escalation money, right? Even if it's the same amount, you're like, I'm going to do a $5,000 appraisal gap and no escalation. Well, what does it matter? It really, really matters because they all wash out differently in the offer.
Very true. Okay, next.
Number 10.
I love this one.
You do? Okay, let me read it.
Oh,
wait. I was going to read it for you so that you could elaborate.
Go ahead. I'm passionate.
Offer to cover certain seller costs rather than offering a higher price.
Sales price, yes. So there are ways, let's say you want to make a $10,000 difference. If you offer $10,000 more on the sales price, there are certain parts of the transaction that are based on sales price. So if you offer $10,000 more, buyer agent, seller agent commissions are going to go up in proportion to that $10,000. There are other things that are going to go up that are that are figured based on sales price.
Right.
So what you can do is instead of doing that, you could apply that $10,000 to some other part
seller
of the
cost,
transaction.
right?
Yeah, seller cost of the transaction. And then that way there's the net to the seller is increased, but the cost to the buyer is the same amount. Especially
now with all of the commission changes that are going on, it's like the sellers are caring less and less about what's the sales price and what's this. It's like, what is my net, right? They want to know what's the bottom line, what's the net. They really don't give much of a flip what you call it. They just care what they're walking away with.
And so that brings us to the next point, number 11, is if you're getting creative with this, explain to the seller's agent how this works and how this affects the seller's net.
Because again, not all agents do things the same. They don't all have the same
thought processes, background.
What's the word for like when you've done something for
Experience.
a long time? Thank you.
Or
vocabulary. Some of them just don't have a vocabulary. You need to give it to them. But they don't even have net sheets, right? We've talked to several where they're like, oh, what's a net sheet?
Yeah, what does net mean?
And we'll share the net sheet. And it's like, look, even if you have this kind of offer, we're guessing, you know, that might be going against our client's offer, then see how this is higher. And they'll say, can you share that with me so that they can plug it in? And of course we'll share it, right? Because, and we'll say, let us know what we need to tick to get ours.
Yeah, get that net. What's the seller's net? So it's all about the net, and there are different ways to affect that net.
And communication with that other agent.
Seems
and
like that comes up in every video.
It does, because it's in a helpful, friendly, wonderful, we're all in this together way, not in a lording over it. I mean, it's just agent relations.
That's right. That's
super
right.
important.
Okay, so number 9, I'm just going to recap real quick because I like to do that. I like to circle back.
You're filling.
Yeah. Number 9, make your escalation and your appraisal significant. Number 10, cover different aspects of cost in order to increase the net to the seller.
Instead of just the price. But that's only going to be really effective and important if you, number
11, communicate to the seller's agent. And lastly, so this one is, it's obvious, most buyers know that, especially if you're in a multi-offer situation, you're going to have to waive contingencies. There's always risk. So step number 1 is, if you're going to waive a contingency, make sure you understand the risk. Do not do anything that you don't have that risk tolerance for. There are ways to mitigate that risk. We talked about like a pre-offer inspection, for example, on an inspection contingency. Well, if you can't get the pre-offer inspection, and you're really wanting to get an inspection contingency, you can do things in there to try to make the seller more comfortable. Like, you might say something like, hey, you know what, we won't ask for any repairs under $50,000, you know, or something like that. Just give them something, some form of security.
That would be an inspection, right? And if, like, let's say it's a newer home and the inspection really isn't as important to you, but you know you're going to be going against all these other like over the asking price offers, then there might be other things that you would want to do. Like, that's when you might want to give the appraisal gap and whatnot. If the property is older and, you know, the inspection thing is an issue, your buyer's agent, a lot of times we gift you a home warranty at settlement. You know, if it's like, okay, you've done everything you can here, and it's like, that's really what's going to get it for you, then a lot of times your agent will, your sweet agent, they don't all do this, don't expect it, but they will get you a home warranty, and if they don't, then get one yourself.
That's right. Yep. So the keys to going through all these is that when you're in a competitive seller's market, which we're still in a seller's market, it's not as strong as it was in 2020, 2021, but it's still a seller's market, and you're still going to find yourself in positions of multi-offer situations. Pick 1 or 2 of these, talk to your agent about it, see if they have a good grasp, because you have to have a good grasp, because if it doesn't play right,
because every point has an effect on the other points of the contract, and you have to know how they all play together.
That's right. That's right. But these are good strategies. So, all right. So that's number 9 through 12. All right.
Rip.
Yes. All right.
We'll have this for the next time.
We'll see you guys on next week's video.
Everybody, it's time for our mortgage minute.
And
nope, it's not the mortgage minute. What the hell? Why do I always call this a mortgage minute?
It's a market snapshot.
Okay. Hey everybody, it's time for our market snapshot. Yes, did I say it right?
You did.
The market snapshot.
That's right.
5 minutes or less. What's going on in the Northern Virginia real estate market in the last 7 days? Why do we do 7 days, Sean?
Because 7 days, because if you are looking at the market stats of sold properties, then you are looking at actually what happened, what are we, in September?
Yes.
What happened in probably
We're mid-September.
July. Yeah, so beginning in July into June, because it takes a property 30 to 45 days to settle, then it takes the end of whatever month it settles in to get to the sold status for that month, then it takes about 10 days to collect all the data to make the monthly market report. So you're looking at a 45, 60, 65 day delay. If you're making decisions based on sold data today, you are behind.
It's way behind, like
way behind. So we're using lead measures. Yes, we explain this each week, but it's important that everybody understand. We're using lead measures on this market report, which are properties that went under contract, properties that came on the market. So supply versus demand, so we can make real-time decisions.
Yes, that squiggly orange line you're looking at is the properties that have gone under contract. Those are the buyers that have gotten offers accepted, right?
Yep.
So the squiggly blue line is the new listings. Those are homes that have come on the market from sellers deciding to sell.
Yep, that's right. Okay, so what does all this mean? Well, You can see that we have been on a downward trend. Each one of these marks is is exactly 7 days. You can see we were on a downward trend of buyer activity, a downward trend of inventory. Buyer activity was still higher than inventory, and the lawn is out there, of course, so just bear with this noise. Buyer activity was higher than inventory, so we were in a seller's market. This was the Labor Day weekend,
Yeah.
so we saw obviously a decrease in inventory and buyer activity. And then last week, coming out of the Labor Day weekend, buyer activity spiked, but so did inventory, and it spiked even more. So if you compare this to last year, this was the week after Labor Day weekend, so our buyer activity is in the exact same spot. Inventory is actually higher than it was last year. So we'll see what inventory does if it stays high like that.
That means the seller's market's coming down
yeah,
a little bit, right?
yeah, if it stays
what are
up
we
there.
gonna see in the next graph?
Yeah, so if we go over here, anything above our blue line is a seller's market, anything below is a buyer's market. Seller's market meaning the sellers have the upper hand, there's more demand than there is supply. And you can see we actually dropped down into a neutral market for the first time in very close to a year.
Yeah.
So we'll see what this does and if it continues, but there is certainly an opportunity for buyers right now, this week.
Right now,
Right
interest
now.
rates are lower. You've been sitting
Yes.
on the fence waiting for
Interest
the
rates came
interest
down
rates to
this
go
week.
down, and
Yeah,
yeah, good.
it's time.
All kinds of
Okay,
good stuff.
if you guys have any questions, let us know. What?
I just thought of a question that needs to be answered.
What is it?
But it's not the time for this.
I'm cool. Okay. All right, we'll see you guys on next week's video.
Bye. Hey everybody, it is time for this week's Mortgage Minute with Tatiana Lopez from Prosperity Home Mortgage. Hello.
Hey.
Hello, how are you?
Good. How are you?
Good, and rates are doing good as
I was
well.
just saying, naughty or nice.
All right, so yeah, so the interest rates are doing good, and let me share my screen with you. So for the last week, from September 6th to 12th, rates decreased again, and as as they said, mortgage rates have fallen more than 0.5% over the last 6 weeks, and are at their lowest level since February 2013. We can see here conforming is at 6.2442, and jumbo is just hair above that at 6.48. FHA 617. I do quote FHA VA clients in mid to low fives right now as
Wow.
well.
Great.
So remember, this is average rates. It's for some it's gonna be a little bit more, for some it's gonna be a little bit less.
Yeah.
What are you seeing?
So the Fed
What are you seeing on the low end of the conforming, the 30-year conforming?
on the low end of conforming, it's about 6.125.
Okay,
Wow.
that's awesome. Wow.
Yeah.
Very good. Okay.
Yeah, so let's see what's gonna happen next week. The Fed's saying that most likely they're going to lower the interest rates because they're pretty confident that inflation is falling back to their 2% target. So let's see what's gonna happen next week. Again, the mortgage rates, the Fed reduces the prime rate, not the mortgage rate, but the mortgage rate will react to the commentary. Most likely it's going to be a good reaction, but it could go either way. So we just need to keep an eye on that. A lot of my clients are keeping an eye on that. They don't want to lock in. So we just being very cautious and watching that carefully.
Okay.
Yeah.
Okay.
Yeah.
Yeah.
Good. All
That's
right.
good.
Yeah.
I'm happy to see that.
Well, so with these interest rates coming down like this, I know that we're seeing buyers starting to come off the fence and jump in. We've sent you several applications this past week. Since people are starting to get ready to come back in the market, what are some things that they need to make sure that they're avoiding? Like maybe 5 things that they need to make sure that they're avoiding as they're getting ready
Round
to
about 5.
just round about 5. Yeah, just an
Handful of-
arbitrary
Can we get
number.
some in a bonus?
Yes, 5 and a bonus. How about 5 and a bonus? Can I hear
5
that?
and bonus.
Uh,
Yeah, exactly. Like this week, there's a lot of activities, a lot of new applications coming in. I think people are done with vacations, with holidays, they exhale, and they feel more confident in buying. I don't know, maybe it also has to do something with um the debates and people making up their minds. I don't know, because they were saying that a lot of people are pausing before the elections. So, but I see a lot of activities right now, so it's a good sign, but it can also create some competition as well. So
Yep.
few things, 5 biggest mistakes that people do while they are.
How did I know it was gonna be 5? Like, just that's she's picking on me over here.
Oh, yeah, that they do while they're in application or right before when they getting ready to apply.
Yep.
Open new credit card
Mm.
trade lines or any trade lines, buying a car. I bought new Tesla, my monthly payment is $1,000, so now let's go buy a house. And that's gonna lower their buying power by a lot. So hold on to opening any credit cards, or sometimes even closing cards could affect qualifications, because it could temporarily lower the credit score, and with that is, you might qualify for less desirable program or get less desirable terms, and price will be lower because of that. So just don't do anything, with your credit.
It doesn't always follow logic, right? Like the
You're
credit
right.
score. And we did a video with you about this, a scenario that maybe we should put a link in here
Mhm.
to that video, because it's like people think, oh, well, I'll close these out and I'll pay stuff off. It's going to certainly improve my credit score and everything. And that's not always the case. And so I think definitely
Exactly.
link that to it.
Definitely.
Yeah.
Definitely.
So whatever is pertaining to credit, just like I say, always don't self-medicate yourself or self-diagnose.
Yeah.
Talk to the consultant and see if it's okay to do it or not, and then make the right decision. So the second thing is, we'll also look at assets, right? Where the money coming from for down payment and closing cost. Try not to spend money because you might need it. You might need it for the down payment or closing cost, or if you spend money by using credit card, again, it goes back to number one, where you could shoot yourself in the foot and qualify for lower amount because of that.
Yep.
Deposit cash or unverifiable assets. We'll look at 2 months of bank statements, whatever deposits come in there, besides the income, large deposits, we're gonna question where the money coming from. Cash, in most cases, 99.9% cases, is not acceptable source of assets, because you can't really track it where the money came from. So if you have $10,000 in cash and you need to bring $10,000 to the table, you deposit this 10,000 to your account. For us, you don't have money. You have zero money, because we can't verify where they came from.
That's another don't depend on logic thing. It's like, I figure if I walk into the closing table with a suitcase of $10,000 in it, that's
It's like,
gold.
of course, this is cash.
Yeah, what
This
are you
is
talking
better than a
about?
check. This is better than, it's cash,
Yeah.
right? And it doesn't work like that.
There's so many nuances to the lending game that it's like you
Yeah.
always have to talk to that consultant.
Yeah.
Yeah.
Well, and I want to actually clarify the term of cash, because in a lot of cases, people refer to cash as checking, savings accounts, something that is liquid, right? Something that readily available. We refer to actually hard dollar bills, cash, mattress money, that you put money aside in the safe. So that type of cash, that is not acceptable.
So
Yeah.
Just want to clarify.
Yeah, and just real quick, that makes no sense, and now you don't have to go into a lot of depth on this, but why? I got 10 grand, why?
I'm getting mortgage fraud. right?
Yeah,
Like that you have to be on the lookout for mortgage fraud or from it coming from any kind of illegal means,
Yeah.
and that would be,
or maybe a high-end loan that's not reported yet, and they took the cash from this loan.
right,
Yeah,
Tatiana.
what's going on with it?
Right, so yeah, in most cases, that is because of the, was it, did you borrow money from somewhere and you need to pay back now?
Okay.
Where did it come from? Money laundering, that's another thing. So yeah, that's what we look at.
We were
Okay,
right.
we were
High
right.
five.
We got, thank you.
You're so smart, guys. You don't even need me.
It's almost like we've talked to you about this before.
All
Well,
right,
I'm glad that you remember what I say, so.
that's right, that's right. All right, what's
Um,
number 4? I'm excited.
Okay, so number 4, stop working or work less.
Okay, so make sure you don't stop working or work less. I have to put this in context.
Yeah, don't do that.
I'm like, yes, I'm getting in there.
That's number 4 biggest mistake.
Yeah,
If
Yeah.
you stop working and you're making zero money, you can get a mortgage for $0, basically.
or even changing careers, right? Or changing jobs or something like that, like any big change like that.
Any change to just I always say change to those 3 pieces of puzzle that we have to look at: credit, assets, and income. Talk to the consultant before you do anything. When you change in jobs, it could be totally fine. You just need to double check with the consultant. You
Yep.
change the profession, you might have to wait for a few months before we would consider that income stable. We need to make sure that you really like what you're doing now. If you were a teacher for 20 years and now you're a firefighter or something like that, you know, do you really like it? Are you gonna stay in there? We want to
Yeah.
make sure that you're stable in this type of profession. Working less could be problematic because if you work full-time and now you're part-time, you have variable income, and we have to wait certain period of time before we can use that variable income. Or if you did have variable income before, and we always have to average it over 2 years, and before you were working a lot and now you're working less, that and your average income is lower now, so that could create a problem. So yeah, just check with the lender before doing anything like that.
Gotcha.
And you know, the 5th one is don't change income structure. If
Mhm.
you were on W-2 and you became independent contractor, maybe with the same company, but now you're on 1099, where you paying taxes yourself, that is a problem for a mortgage, meaning that you're not gonna be able to buy right away. You'd have to wait. And
And what's interesting about that is that you could even have an increase in income going from W-2 to 1099, let's say, but that's still
Right.
logically, it's like, yes, I can qualify for more house, but
Yeah,
mortgage wise, which is illogical in a lot of ways, it
Yeah.
hurts you.
And the reason being is because when you're on 1099, like I mentioned, you pay taxes yourself.
Yeah,
And, you know, here we do our taxes, you know, if you're self-employed, you write off expenses, you pay you pay taxes on the lower income this way. So it's something that is very beneficial for self-employed people. But when we lend the money, we go by income that you pay in taxes on. So when you're on W-2, you pay in all the way, you know, whatever you make, those you know, taxes you paying on. So when you're self-employed, we also go by income that you pay in taxes on. So that's
makes
only
sense.
fair, and
Yeah.
that's how we calculate it. That's why if you change into 1099, we need to see that tax returns to see if you had to write off any expenses or not.
Yeah, that makes sense. Yeah.
yeah,
Okay.
And the bonus one is my favorite.
yes.
Fancy.
The biggest mistake, do opposite of what your mortgage consultant.
Yes.
Yep. See that all the time.
It happens a lot. I say, please don't do this. 5 minutes later, they call me, I just did it.
Yeah. Because it's not like, what you do, it's not like this one and done thing. I'm going to take this person's, all their information and plug it into this box and it's going to spit out exactly the only one right answer, right? It's like what you do, there are so many different potential answers, outcomes for so many different scenarios that it's like, it just doesn't make sense. You're almost like one of those old school operators. Remember when they were at the switchboards and they were plugging all the things like this? It's like you're doing that and nobody who doesn't do that like you do, you live and breathe it, no one would be able to know what switch to plug in where or anything, no matter how much sense it seems to make. So you go, switchboard operator to the stars.
You go, analogy girl.
Give it to me, Tatiana. But
I
yeah,
love her analogies. I don't know. You need to write a book.
I should write a children's book with all the analogies. When your parents say this, it's kind of like,
That should be the name of the book. It's kind of like.
yeah,
There you
kinda
go.
like.
Maybe you should do that. It's a very good idea.
You should write it down.
Yes, I think I need a new career.
Yes.
A career
Shit.
change. I'm gonna change my job, but not before I talk to my loan consultant when I'm ready to buy a house.
That's right. That's right. All right. Well, thank you. I know we've covered this before, but I really appreciate you kind of refreshing it for the buyers entering the market now, because it's
And
timely.
we'll circle back to it again in a few months too, because we'll have a whole new buyer pool that will need to hear exactly this.
That's right. That's right.
Exactly.
All right.
Well, thank you guys. Always nice to see you.
You too.
How do they find you?
Oh, yes. Do you have your
Yeah,
slide?
call me. 571-245-3000.
Yes. All right. We'll see you next week.
Bye.
Bye.